Hey guys, this is Rudy coming at you live from Palm Beach in Florida. It is Tuesday. It is April the 30th. It's the end of the month. And can you believe it? I just made a video yesterday on Alliance Resource Limited Partners. And here I am back again with Alliance Resource Limited Partners version 2. Why would I do that? Well, I'm going to tell you in just a minute. So stick with me here for a couple of minutes and I'll tell you what's going on with Alliance Resource Partners that prompted me to make another video just one day later. CoinDesk reported coal miner Alliance Resource dabbles in crypto mining and mines 425 Bitcoin tokens, right? So what exactly is going on here? Why is a coal miner getting involved in mining Bitcoin? Well, let's take a closer look and see what's going on. Firstly, let's just do a quick recap of their quarterly results, which were pretty good. In fact, if you're not sure if it's pretty good or not, just take a look at the stock price over the past couple of days and you'll see that stock price has performed pretty good because the results were pretty good. Revenue, $650 million. Net income, $158 million. Earnings per share, $121 million. I wish, $1.21 per unit. The analysts expected $1.02. EBITDA, I don't like EBITDA as a benchmark or a metric or as a financial reporting tool, but you know what? People use it, so I'll just bow down to their greater wisdom. Anyway, the EBITDA, I'm going to get back to this one in just a second, $235 million. Coal sales volume increased by 2.4% to 8.7 million tons, despite the fact that the coal production declined slightly. The coal sales prices per ton was down, but even though the prices were down, the oil and gas royalty volumes increased 18% to a record 898,000 barrels of oil equivalent. Segment adjusted EBITDA, here we go again, $40.85, up to a 3% year over year. Cash flows from operating activities, $209 million. Capital expenditures, CapEx, $123 million. Quarterly distribution for people like me who are long in Alliance Resource Partners, 70 cents per unit. That's for the quarter. They're paying $2.80 per year. Liquidity increased to $551 million. So, okay, that's a quick flyover just to tell you how well Alliance Resource Partners did over the last quarter. Anyway, I'm not trying to pump the stock. I'm just here to share some information with you. So what happened? So a couple of guys on our channel here in our investment community asked some questions, and they were really, really great questions, which prompted this video. So, right, the first one, Matt Bittner, is not necessarily in order. So when I say the first one, it's just the one at the top, right? Do you know how much of ARLP business is based on coal exports to other countries? I think the reason why Matt was asking that is because the growth areas for coal are predominantly in South Asia and specifically India and China. So I looked it up on their website. It says in 2023, so last year, 80% of tons sold were purchased by domestic electric utilities, right? So by far the greatest majority, 80%, 15.7, so almost 16% sold into international markets, and 3.4% were sold to domestic industrial customers, according to the website. But Mr. Burke drew my attention to the fact that I might just want to spend a little bit of time paying more attention to what they're doing from a Bitcoin mining point of view, because Mr. Burke drew my attention to the fact that one of the questions asked by the analyst during the conference call, the earnings call, was, and then could you shed some light or additional light on the Bitcoin mining activities and including the rationale and any potential risks? Question by Mark Reichman. So I'm going to come back to that in a minute because I want to talk about that just a little bit. Michael Byrne also posed the question, ARLP, a good one, still not getting enough bites at these lows. Did you explore that they are starting to do some Bitcoin mining at plants, right? So he says, I'm not seeing much commentary on that anywhere or anywhere else for that matter. In other words, it was just like a flyover, right? So flying beneath the radar, if you prefer, where not a lot of people are paying too much attention to it. So let's take a look and see what's going on here. So NASDAQ listed coal miner Alliance Resource Partners said in its earnings call that it has mined $30 million in Bitcoin from excess power at its facilities. In the second half of 2020, this is Kerry Marshall, the CFO, Chief Financial Officer for Alliance Resource, says in the second half of 2020, we started mining Bitcoin as a pilot project to monetize the already paid for yet underutilized electricity load at our Riverview mine. Now, isn't that a brilliant way for you to utilize your underutilized electricity load, which has already been paid for, and it's just sitting there, right? So in other words, what Kerry Marshall is saying, we have all this electricity supply, if you like, just sitting there doing nothing. So why don't we just use it to mine Bitcoin? Marshall said At the end of the quarter, the company had 425 Bitcoins. That's quite a chunk of money, right? Considering that Bitcoin's trading at around 60 something on its balance sheet, which it is valuing at $30 million. Well, not today, but maybe at the time of reporting. And also factoring in the net cost of property, plant, and equipment, it was up $7.3 million. Marshall said the company wasn't buying Bitcoin or anything of that nature. It was only mining Bitcoin with the equipment it already has. We do have some extra capacity that we are renting out to other Bitcoin miners. Are these guys smart or what? Within the data center that we've effectively built for this Bitcoin mining to take advantage of the low energy costs we have. And guess what? Alliance Resource Partners has the lowest energy cost you can imagine because they are mining coal. In the grand scheme of things, ARLP Bitcoin on the balance sheet holdings are relatively small. I'm going to talk about that in just a second because I looked it up. Data compiled shows MicroStrategy has the largest holdings at 13.5 billion. Other notable entries on the list include Tesla, which has $615 million worth of Bitcoin. Bitcoin is currently, well, was currently trading at about $63,000 according to CoinDesk. So I looked at the balance sheet for ARLP. This is from their balance sheet. This is the income statement that says change in fair value of digital assets. Of course, that is all Bitcoin. For 2024, for the quarter, $11.8 million. And in the previous quarter, at the end of December 2023, it was zero. And down at the bottom here, this is from their balance sheet. The current assets show digital assets to the value of $30 million. And at the end of December, that was $9.5 million. So up quite a bit. Nice little jump there. Money for nothing and your chicks for free, according to Mark Knopfler. Let's talk a little bit about EBITDA, right? So analysts and financial people, especially in the United States, love to talk about EBITDA. What is so special about EBITDA? So by definition, it means earnings before interest, taxes, and depreciation or amortization. Amortization, if you're a mine, could also be referred to as depletion. Now, EBITDA, as a general rule, is an interesting benchmark to look at because effectively what it does is it eliminates all the sort of non-cash entry elements from your operating revenue that you've generated, because these things like depreciation and amortization or whatever don't cost you any money, but you are allowed to deduct them, making your gross profit less or reducing your gross profit, which also means you pay less tax. So now we have EBITDA, and look at Alliance Resource Partners. They've just added another little element to this, which is the change in fair value of digital assets. This is not according to Rudy. This is according to Alliance Resource Limited Partnership. They are saying segment adjusted EBITDA is defined as net income attributable to ARLP before net interest, income taxes, depreciation, depletion, and amortization, change in fair value of digital assets, right? So DA. So I'm highlighting this here, EBITDA, EBITDA, and I'm adding another DA for the change in fair value of digital assets. So from this day forward, we will call EBITDA, EBITDA. All right, so you got to stick with me here because next time I talk about EBITDA, you are also going to have to consider that I'm talking about a change in the fair value of digital assets, which has never been done before. So this is a world premiere and a first, and you heard it here first. No one has ever spoken about EBITDA until Rudy from Best Investor today. What about Bitcoin? Well, Bitcoin was $63,000 approximately at the time of the earnings call, which was a long time ago, now approximately 24 hours ago, right? But today, Bitcoin is trading at about $60,000. I don't remember when I took the screenshot, but oh, there it is, 7:44 p.m. No, I didn't take it at 7:44 p.m. I took it during the day. So this is, oh, okay, it's a different time zone. Anyway, Bitcoin was down about 6% or so today, down to $60,000, which obviously will affect their EBITDA, right? So this is Bitcoin's picture for one day. And if you're holding Bitcoin as a store of value, instead of holding it as a digital asset that has different intrinsic values or a different meaning to you or a different reason why you should hold it at all, you cannot view it as a store of value when the market tanks and Bitcoin just tanks along with it. Now, experts, and this is where the experts come in, right? Because we have to always have an opinion from the experts. So scientists say, experts say, whatever, right? So whenever you read that, especially if it's at the start of the sentence, you really need to strip it down and say who's saying this and who's saying what. fear the resurgence of environmental narrative as a U.S. coal miner generates $30 million by mining Bitcoin. Alliance Resource Partners predicts that it could mine as much as 190 Bitcoin this year. Well, at about $60,000 per coin or token or thereabouts. Now, that's a good chunk of money, right? It's certainly enough operational change for them to make additional dents in their capex or reduce their operational expenditure because it's money for nothing and your chicks for free. Crypto Slate says, however, crypto environmentalist. What the heck is a crypto environmentalist? Is that like a degree that you can study at one of these woke universities nowadays? I'm not sure. You can tell me in the comments. Daniel Batten, never heard of him before, but he's a crypto environmentalist. He argues that the firm's pivot to Bitcoin mining could harm the environmental narrative around the flagship digital asset. He said Bitcoin mining companies have moved off using coal. That's not actually true, but to a large degree, they are all trying to position themselves as being green and environment friendly and using only renewable energy in order to mine Bitcoin. But I guess, Daniel says, you can't stop coal mining companies from mining Bitcoin. No, you can't, because they have money for nothing, especially when it comes to mining Bitcoin. Either way, in terms of changing the environmental narrative around Bitcoin, this doesn't help. Doesn't help who? Well, it doesn't help the narrative, right? They are trying to make a story out of this, and it's not working the way that they had planned or intended it to be. Over the past few years, Bitcoin mining companies have increasingly relied on green energy sources, with over 50% of their energy sources powered by renewable sources. Those are predominantly solar panels or photovoltaic panels and wind turbines. Of course, we don't need to necessarily take into consideration that in order to manufacture photovoltaic or wind turbines, you require enormous amounts of fossil fuels. In fact, one wind turbine requires 80 barrels of diesel just to keep the props from turning, right? Anyway, that's a separate issue. So Bitcoin mining companies have relied increasingly on green energy sources, with over 50% of energy sources provided by renewable sources, which themselves have sucked up an enormous amount of fossil fuel. I said sucked up an enormous amount of fossil fuels. Their entry into the Bitcoin mining scene could prompt critics to renew their concerns about the environmental hazards associated with the sector. Boo-hoo-hoo. Bitcoin Magazine, who is Daniel Batten? Daniel Batten is a climate tech investor, author, analyst, and environmental campaigner who previously founded and led his own tech company, which exited in 2019. So Daniel Batten is a writer, really, for Bitcoin Magazine, and he is the leader, the expert that they went to get an opinion about Alliance Resource Limited Partners mining Bitcoin with their free excess energy. Here's Daniel's quote from X, which was previously known as Twitter. Bitcoin mining companies have moved off using coal, but I guess you can't stop coal mining companies from mining Bitcoin. Either way, in terms of changing the environmental narrative around Bitcoin, this doesn't help. He has a fair point, depending on where your allegiances lie. But it doesn't prevent people from giving him some counter comments and replying to his post on X. Tipton Cole said accepting the framing that coal is intrinsically bad for the environment is a mistake. Virtue signaling use of renewables instead of coal is feckless. Some good language there, right? Mine for Heat Gardner said we need better education on lost power and off-peak waste. Even though it's coal-powered, the entire electric grid is better off with miners using their excess. Well, of course, you can call me incredibly biased, but I tend to lean towards Tipton Cole and Mine for Heat Gardner and their preferred narrative rather than Daniel Batten's. So how do I feel about this in general? Drill, baby, drill. If you want energy independence, especially if you're in the United States, you got to drill, baby, drill. But you can also call it dig, baby, dig, depending on what it is that you're doing. Or in the case of Bitcoin, mine, baby, mine. I'm not sure how you feel about Alliance Resource Limited Partners mining Bitcoin. I think it's a smart move. I mean, this is a really, really well-managed company, and they are doing exceptionally great things. I would never in a million years, if you had asked me when I first went long in Alliance Resource Limited Partners, which is now almost 2 years ago to the day. It's I think I started buying Alliance Resource Limited Partners in well, it might be 3 years, 2021. I would never have dreamt that ARLP would be mining Bitcoin and even renting out space to other miners for them to mine Bitcoin, especially because they have excess electrical supply and capacity. So smart move, man. This is a really well-managed company. And it's not a company, to be honest, that I pay overwhelmingly much attention to. There are companies within my portfolio, so issuers, publicly traded issuers in my portfolio, that I spend a lot of time on, and I pay a lot of attention to them to kind of see where they're going, reading their financial reports, the SEC filings and things like that. I mean, you guys will know if you've been following along with me, like how deep I dived into companies like, Occidental Petroleum or Devon or whatever. I do that with quite a number of companies in my portfolio, but Alliance Resource Partners is actually an exception to that rule, because originally when I purchased my first tranche of Alliance Resource Limited Partner shares, I bought it purely from the point of view of saying, as long as they keep paying a dividend, I'll keep building a big position or a good position in Alliance Resource Limited Partners, because I view it as a high-yielding savings account. To that end, the business that they're involved in, the commodity, their quarterly results or whatever are of less interest to me, because it's a high-yielding savings account. So as long as they keep paying me a dividend or interest, if you'd like, of 12, 13, 14, 15% per year, I'm quite happy to just have it sitting in my portfolio. But then there are moments like this, spurred by people like Matt and Michael and Mr. Burke on our channel, that prompt me to go like, wait a minute, take another look at this one and see what's going on. Anyway, some of the stuff was a little bit tongue-in-cheek. I hope you enjoyed it, and thanks for watching. I'll be back soon with more, maybe with something else. Talk to you then. I look forward to interacting with you in the comments. Take care. Bye-bye.